Uneducated Economist. Let's see, what should we talk about? Weather is changing. That's really nice. It's going from the normally beautiful Astoria to the drizzly, rainy, overcast, typical Astoria that we know and love 9 months out of the year. So we're headed that way. Weather's starting to change. And my favorite part about fall is the mushroom season. Up here in the Pacific Northwest, mushroom picking is a big hobby that a lot of people do. Gourmet mushrooms grow like crazy up here. So do the magic mushrooms, but I just go for the gourmet ones. Chanterelles are by far the most popular one up here that everybody goes after, and I love them. It's a great hobby. Gets you out into the woods. It's a great thing to teach the kids, to get them not only closer to nature, but being able to harvest something from the woods that you get to go home and eat is always a blast. So yeah, I'm looking forward to the chanterelle season coming up. Right on. 58 of you already up in here. Left a couple of articles for you down there in the description. These big time economists, they're still saying it. Fed's gone too far. They missing it. All the stuff that says the Fed has completely lost control is still out there in the narrative. And it's not that I'm trying to be like an advocate for the Federal Reserve. I mean, anybody who's followed my channel for any length of time knows that I am definitely a believer in ending the Fed. We do not need a Federal Reserve or the central banks to be in charge of our monetary policies, although a lot of people really do take advantage of that. And, if you understood the Fed as well as a lot of people out there did, you'd probably be able to take advantage of their situation as well. But because we have information like these economists are putting out there, it makes it very difficult to try and understand what it is that the Federal Reserve is trying to do with their monetary policies. And that's where, if you follow the Uneducated Economist, like we have put here on this channel, we have talked a lot about the Federal Reserve's monetary policies and the information that they have given through their speeches, which is not something that I hear a lot of people bring up. Like, I don't know about the other YouTubers saying, hey, I just read this Federal Reserve speech and this is what they had to say inside of it. I mean, I'm sure they do, but, it's not nearly that common out there to hear that. So in their speeches, they had said that they were going to let the inflation run extra hot, extra long for an extended period of time. And they were saying that back in 2018, long before COVID, long before shutdowns, long before all the other money printing and all that other stuff went on. The Federal Reserve was talking about letting inflation run extra hot, extra long. And during that time, I was questioning it. I'm like, how is it that you're going to get this inflation? The inflation that you were anticipating that you were going to get from the quantitative easing 1, 2, and 3, and 4 that failed to produce the 2% target inflation rate that the Federal Reserve was looking for. But yet in 2018, they said that they were going to let inflation run extra hot, extra long for an extended period of time. Just couldn't figure that one out. And then the pandemic hit and they shut the economy down and told everybody to stay home. Oh, severing of the supply chain. That's what did it. All right, so now we're sitting in a much different situation in which that the Federal Reserve is going to try and bring the price inflation. Now, we have to think about this in two different ways, because a lot of people just use this word inflation talking about prices of stuff, right? And that's where they talk about. But inflation is really a much broader thing than just prices. Really, inflation is the expansion of money and credit. The prices are the results of that. So the prices are the symptom of inflation. And the same thing with deflation, the contraction of money and credit. That would be a deflationary scenario. The prices would be the symptom of that deflationary scenario taking place. So right now we have balance sheet reduction. We have the Federal Reserve and monetary tightening. That is a deflationary scenario. How long it takes to actually impact the prices, who knows? And how far will it take, as far as the lifting of interest rates and the timing, like as far how long out they're going to let these interest rates remain elevated. It's going to take some time to try and figure out how these prices are going to come down due to the lifting of interest rates, because I was questioning this a very long time ago, that the Federal Reserve is not going to be able to fix the price inflation by lifting of interest rates, because it was the supply chain breakdown. You need to get the supply chain up and functioning again. And this is what the Federal Reserve has said, that they were looking for help from the supply side of things. So it's not the Federal Reserve and the lifting of interest rates that is going to cure the inflation. It's the opening up of the economy. What they are trying to do with the lifting of interest rates is to try and get some of their ammo back. The Fed funds rate of 5% is normal for them to have in order to drop to stimulate the economy. Did I say that right? So the Federal Reserve would normally want to drop the Fed funds rate around 5% in order to stimulate the economy. They simply just didn't have the room. And even back in 2018, when we first started having the downturn in the market, a lot of people don't remember that. In fact, I was talking with a guy yesterday who was bringing this up. And he said that back in 2018, a lot of people don't remember that we were having markets crashing right about then, and the Federal Reserve was trying to figure out what the hell they were going to do about it. Remember all the autopilot, where they were going to let interest rates go up a quarter point every quarter without any kind of, interference on it. They were just going to move it. Well, they got it up to, or like what, it was like 2.5%, 3% or something on the Fed funds rate. And the economy was pissed. Like the markets were turning down. Everybody was upset about this. And so the Federal Reserve pretty much had to reverse course. Although they didn't really reverse course at the time, they just stopped moving, even though everybody said that the Fed had pivoted at the time. They didn't. They just stopped lifting of interest rates. They did eventually bring the rates back down and then, tried to stimulate the economy during the pandemic and all the other stuff that happened with it. So the Federal Reserve needs to bring those Fed funds up to that 5% level in order to try and drop them down during the next recession in order to stimulate the economy. They're not going to have a pandemic to blame in order to stimulate the economy with. Like, what is it that they are going to use for an excuse in order to print up all this money and inject it into the system? They're not going to have much of an excuse. But if they have the Fed funds level up to that 5%, they won't need to do a bunch of fancy stimulus packages or whatever. They can just drop the Fed funds to 5% in order to get the people out there to start borrowing money to buy houses and cars and go on vacation and stuff. That's the idea behind it all. Whether or not it works, that's going to be a whole other question on the matter, right? But that's what the Federal Reserve is attempting to do. And they're trying to do it so quickly that it doesn't impact the economy because there's a lag to it, right? So when you lift the interest rates, the Fed funds, when that interest rate is first lifted, it takes 6 months to a year before that starts to impact the economy. So right now, we are just now starting to feel the effects of the very first lifting of interest rates that the Federal Reserve has done. Not all the rest of them. Those things haven't impacted the economy yet, even though you would like to, these economists out there would like to say that they've gone too far. I mean, what did Krugman say? He said, falling exports and rising imports will eventually be a major economic drag, but it takes time to shift to the new suppliers, so this effect won't really happen until next year. He goes on to say, I argue that these indicators tell us that the Fed has already done enough to ensure a big decline in inflation, but also all too possible a recession. So he is saying that all these lifting of interest rates has already done enough, even though they haven't done anything. Right? I mean, they might have changed the people's perception and might have impacted the markets, but as far as an economic impact, they haven't even started to impact the economy yet. They won't do that for another 6 months to a year after the lifting of interest rates. So right now, we are just now feeling the effects of the very first lifting of interest rates, and he is saying that the Fed has already gone too far, right? They haven't. Right? Those lifting of interest rates has not impacted the economy yet. Just give it some time. We're about ready to feel some real pain from the lifting of interest rates if the Fed doesn't reverse them, right? And I don't think they will. I think they're going to keep them elevated for some serious time, and they're going to keep the Fed funds up until they can get the average inflation rate to that 2%. And since nobody really knows exactly how they figure out average inflation, it's going to be arbitrary up to the Federal Reserve to say, oh yeah, we finally achieved our average 2% inflation target. And we can start bringing the interest rates back down, but it's going to be much farther out there than people are anticipating. I mean, there's already people talking about the Federal Reserve pivoting, and they're not going to do it. There's no way that the Fed is going to pivot at this point. Let's see here. What are you guys talking about? All right, thanks. All was wondering if it was my interface or headphones. What is it? You guys can't hear or what? Dude can chat. Yeah, I can really babble on, can't I? Let's see here. Other countries now know that and are ridding itself of U.S. dollars. Not true, man. I would second guess that one, because you go out there and you look at like places like China, Sri Lanka, Pakistan. There is all kinds of countries out there who have written debts in dollars that are due in dollars, and they are desperate for them dollars. That's why you're seeing the dollar strengthen as much as it has been right now. I mean, granted, over the long run, I could really agree with that they are going to rid themselves of the dollar and find a new system to get into. But that's not happening tomorrow, right? And tomorrow, those debts are due in dollars, and that's what they're going to really want. That's one of the reasons why, the problem with we're having right now with the exports and imports. We are having a hell of a time trying to get our exports out to the rest of the world, and the imports are getting cheaper. This is the Cantillon effect. This is going to be very damaging to the economy. A lot of people don't realize that. They think, wow, cheap imports, that's awesome. No, it's not. I mean, it is awesome for the moment while we're living and we're buying those things, but it's not awesome over the long run, because what that eventually does is it drives out our domestic manufacturing, drives ever increasing amounts of foreign imports in. And once the new money turns off, then everybody falls into poverty. This is not a good sign. The rising of the strengthening dollar, creating more imports and less exports, is the Cantillon effect, and it's not a good sign. It's actually a very troublesome sign. Did I see a $5 super chat there? Thank you so much. Who did that? Right on. Isaac at War. Thank you very much for the $5. Any comments on Ben Bernanke getting the Nobel Peace the Nobel Peace Prize for Economics went to Ben Bernanke? Oh, good Lord. I mean, is this guy that smart that they actually, I wasn't going to bring it up because it's very frustrating for me to see that this dude seems to have some kind of peace prize for his knowledge in monetary policy and banking and his idea of the depressions. Oh God, it just drove me nuts to think that Ben Bernanke is a Nobel Peace Prize winner. I'm not a fan of Ben Bernanke. All right? I'm just not a big fan of his. But then again, I'm not a fan of the Federal Reserve or any of the people who work there. There's nobody who has ever worked for the Fed that I would say, man, that's a really good dude, man. I mean, I'm really glad he was in charge of the Fed, or I'm glad he worked. I don't have that feeling. That is not something I even think about. So it doesn't matter who's working at the Fed. I don't really have this, I don't know what to say, this, I don't know, this feeling of major respect for him or something. I understand the monetary policy and the banking and the finance, and there's a lot of economics and history and stuff like that you need to know in order to work at the Federal Reserve, to be one of their economists or governors or presidents or whatever. But I think the job that they do there, it's not a worthy goal in my mind. Anyway, I don't want to talk about Ben Bernanke. Let's talk about somebody else. All right, $2 from Jimmy Olsen Blues. I love your channel. Well, thank you so much for the $2. I really appreciate it. And thank you for the support, man. Ron Paul should be in charge of the Fed. No, I don't think so. Because again, Ron Paul is not a fan of the Federal Reserve. He doesn't believe the Federal Reserve should be in existence. And so therefore, if you put somebody like that in charge of the Fed, they're going to screw it all up, right? You just need somebody who is going to unwind, just discontinue the Fed. Not I think Ron Paul would probably do a great job of it, but he doesn't you need somebody who truly understands the central banking system, that knows how to disassemble it, right? That's really what it would come to. Not somebody who's just going to go in there and just shut it down, because that's going to be really damaging for a lot of people. And I'm not saying that's what Ron Paul would do. I'm just saying Ron Paul is very much on board with the idea of just straight up ending the Federal Reserve. And I agree with that. I just don't want to see a whole bunch of people who are say living on fixed incomes, who really don't know what it is that they are going to do to try and make ends meet, and they are old and they are retired and they don't have the skills or the family or anything else to get that support that they need. If you were to end the Fed, they could very well end up on the streets if you do not have a system prepared for them. So I'm not looking forward to that. Right? I just don't want to set a system up where all of a sudden all these, fixed income retirees are now sitting on the street with no way of figuring out how to do things. That's not a system that I really want to just put out there. But I would love to figure out a transition right? And once that transition started to take place, it would probably happen quite quickly. I don't know what that would look like. I'm just saying that's much rather be. But if it did end tomorrow, I'm ready for that too. Like, if we need to just crash this system and start over with competing currencies using gold and silver and cryptocurrencies or whatever it is, let's do it, man. Let's get it on. But as far as like the people being out there prepared for that, they're not. Nobody is. Retirement was only legit for one generation. Yeah, I can really believe that. Is this the euro dollar offshore issue? Yeah, I mean, it very well can be. Like a lot of people don't realize how many dollars exist outside of this country that didn't have anything to do with the Federal Reserve or the government or anything else. They wrote contracts in dollars that are due in dollars, and then they use those contracts as if they were dollars. I mean, think about how much currency exists out there that is just in that sort of form. I mean, it's crazy to think about when the demand for dollars to fulfill all those debt obligations out there that are due in dollars, when that comes, it's going to be it's going to blow people's mind on how strong the dollar can get. You're going to hear like it's going to be amazing. People are going to be like, man, the dollar is the best place that you could ever be. Everybody should be saving in dollars. And when you're hearing that, get out of the dollar, start getting into anything else, right? But that's when the dollar is going to reach its limit. Nope, not enough, more to come. Okay, crypto crash. 1971 changed it all. I think your fears about people being on the street are going to happen regardless because of the way the system has operated for so long. One could even say it's happening already. And I agree with that. You're absolutely right. It is happening already, and you can see it. I mean, I see it every day. I mean, back here along these tracks, I see the homeless sleeping in their cars. I see like older couple who look like they were recently on the street, like their clothes were not like the tattered gray clothing that you typically see from homeless. These people look like they were probably living in a home or something at one point, but just recently have hit the streets. They got a new tent, they got a fairly new like stuff, and it's just like, man, they couldn't make it, and now they're on the street. And now what are they going to do? Like, I mean, once you hit the streets, it's like a magnet. It's not easy getting back up off of it. Thank you very much, Model 3 Forever, for the $5. What do you think about countries like Japan selling their U.S. debt to retain their yuan currency, or UK pivoting? Yeah, the UK pivot, that was really interesting. I think that had more to do with retirements failing, and they were trying to save the pensions from falling any further. I think that's what that attempt was. How long that lasts, I don't know. If they continue to go the opposite of what the United States is, they're gonna end up in a very damaging spot. So their pivot, I think, was more out of desperation to save the pension funds. What was selling their debts off? Yeah, well, a lot of people say that, like, they're like, look at them, look at all these countries getting out of the U.S. dollar, look at them get out of the U.S. treasuries, right? They don't even want to hold on to the U.S. debt anymore. Well, there's a couple of reasons for that. As the interest rates continue to go up, it makes the holding of U.S. debt less attractive. As the yields rise, the prices fall. So what you would be able to sell that debt for starts to diminish. This is the problem that the pension funds were having. But anyway, so these countries, there could be a reason why they would not want to hold on to the treasuries for that reason, watching the asset price come down. But really, the real reason is that they want the dollars, and there's no easier way to get the dollars than to sell U.S. treasuries. So these countries that are looking to pay off debts or get a hold of those dollars in order to support their currency, because then you need dollars in order to buy your currency back, right? So they want yen or whatever, right? They got to sell their treasuries, get the dollars, and then buy the yen with it. And that's how they're trying to support their dollars, is by buying that yen back with the dollars itself. This again is signs of dollar strengthening and causing more pain around the world. It's going to continue. I mean, so long as the Federal Reserve continues with this monetary tightening, I mean, think about it. The balance sheet has barely started to reduce. Like, they barely reduced this balance sheet anything. And look at the ripple effect that it's having throughout the economy right now. Can you imagine if we did this for a year or two? I mean, it's going to be like, people are going to be crying their eyes out here in the next year about how painful it all is. And the only people who are really going to be like, well, this doesn't hurt so bad, are the people who are preparing themselves during the hyperinflation scenario that everybody thought was going to take place, and stacked cash. Nobody did it. Well, I mean, a few people did. But if you were stacking cash when everybody was screaming inflation, you'd be all right now. Like, we can go into a recession downturn. You might have the purchasing power to buy into depreciated assets, or just to skate right on through, even if you lose your job or something like that, to have a supplemental savings to carry you through. Nobody thought about doing that. In fact, the Federal Reserve and the mainstream media out there pretty much encouraged people to not save, right? I mean, here they had the stimulus, savings ran way up, and they were like telling people, hey, go out there and spend this money, right? You're going to lose your purchasing power to inflation if you hold on to it, so go out there and spend it. And they were encouraging people to take out debts and to, buy those houses and cars and to spend all that money. Well, they put them into a debt trap, right? You put yourself out there until you have payments stretched as far as you can till the end of the month, right? And at the end of the month, you hardly have any money, but that's okay, because you're protecting yourself from the inflation, because you just shouldn't hold on to any cash. And then they reverse everything, and the dollar starts to strengthen, interest rates go up, you start to lose your job, and you can't make your payments anymore. And now you're caught in that debt trap, because you can't even like get out of these things, like your house or the car or whatever, like selling it off, because nobody wants your overvalued asset anymore. And then you start to go bankrupt. Because that's what happened to me, anyway. All right. Let's cruise to the bottom. Fall scarcity of oil is huge part to inflation. Yeah, don't be scared, be prepared. That's exactly right. Like, I don't like live in fear. Like, that's something that a lot of people, they're like, oh, you're a fear monger. It's just like, I don't know how I could be like possibly freaking people out there when I'm not afraid of anything. Like, I'm just telling it as it is, telling people to be prepared, letting them know that, at least from what I've seen, that a lot of things that are put out there as far as the common narrative are not what I'm seeing and not what I believe. But none of that should be fearful. I mean, all of it should be nuggets of information that you're using to prepare yourself. I mean, should you be scared when you're out there in the middle of the river on a boat? Well, yeah, I mean, the chances of dying are very, very high. You're out in the middle of the river. But are you so afraid that you can't go out there? Well, no. I mean, you can have a good time by being out there. You just got to know what you're doing and make sure you're prepared, right? Prepared with, fuel or radios or something, so that you can deal with an emergency when it comes. Same thing. $5 from PM Galleria. Hey, thank you very much, man. You did the that wonderful painting. That's a nice piece that I have. I have it in the living room right now, and people who come over, they ask about that. And I'm like, yeah, man, a viewer sent that to me, and there's real silver on it. So thank you very much. What do you have to say here? Possibility. BlackRock initiated margin calls on UK pensions to force the Bank of England to pivot sooner. They may have discord between them. Yeah, I don't know if it was necessarily done on purpose, as much as I don't think they were anticipating that it was going to impact them or hit them as hard as it did. I mean, it could have been on purpose in order to do that. I don't know. I'm not following the UK as much as I'm trying to follow what's going on in the United States. I mean, it's already just hard enough just to keep up on the monetary policies here and what the Federal Reserve is up to try and, like, understand what it is that the other monetary policies from other nations are doing. But I mean, the pension fund issue is going to hit the United States as well if the interest rates continue to rise, or if the markets feel that the interest rates are going to continue to rise. The pension funds are going to feel it here as well. Because if you're not familiar with what's going on there, ultimately, the interest rates, when the yields begin to rise, the asset prices begin to fall. And the assets that they're talking about are generally like either U.S. Treasury debt or corporate debt or municipal debt or something like that. So it's like a bond. These bonds have yield, which is the interest rate that they pay, and then they have the price tag, which is what you're going to pay for it. All right? So as the yields rise, the price falls. Now, these assets sit on the pension funds. Right? So as the yields begin to rise, these assets begin to fall. The portfolio, the whole portfolio that, like they had $1 million in their portfolio, that begins to shrink. That's very damaging to these pension funds, who are typically underfunded anyway. So when they start to have this shrinking in the portfolio, it gets to a point where they're going to where they begin to become insolvent, right? Where they just simply couldn't pay anymore. If that's the case, then, you know, the pensioner, the people who collected the pensions, they start to go hungry as they don't get their paychecks. And this is something that they are definitely not prepared for, as everybody is saying, this is my pension. It is due to me. This is my right. This is my, you know, guaranteed thing that's going to happen. There's no guarantee. It's a promise. And those promises may not come true. So anyway, that's kind of what's going on there in a nutshell. The euro is crashing. This is great live stream. Awesome job, man. Really appreciate the work you are doing by educating me and everyone here trying to learn. Yeah, and remember, like, this is information, you know, again, that you should use in conjunction with all the other information that you're collecting out there. All the other great YouTubers out there giving great information, you know. I mean, the, I couldn't tell you like who it is that you need to follow, but you should follow a lot of people. Follow as many as you can, and especially people who have counterpoints, you know, like counter arguments, and collect all this information and start to decipher it. And eventually you will start to come up with your own feelings about what it is that's happening in the economy. And remember, like, the difference between you and somebody else is huge when it comes to what you're going to do with your money. I mean, what an 18-year-old kid who's just getting started into the workforce and what an 80-year-old man is trying to do to hold on to his retirement is not even going to be the same thing, even though they're both operating in the same economy, right? But their behaviors and what they do with their money are not the same thing. So we all have to make these decisions for ourselves. We all have to try and gather as much information as we can so that we can figure out what that best move can possibly be. All right. When will the CBDC be released? That I don't know. I'm assuming that it's going to come with the next crisis, whether it's a financial crisis or some kind of natural disaster or something like major. Like, I know there was a major one down in Florida. I'm talking like one that really impacts the entire nation. Something that is going to be like, you know, like the pandemic kind of style thing. That's where the Federal Reserve is going to have the best opportunity to introduce the central bank digital currencies. Because the main reason that they're going to have a major issue with it is that it's not within their charter to be able to print money and inject that right into the system. Um, this is where, like, a lot of people misunderstand the Federal Reserve and monetizing the debt. Like, the Fed cannot go directly to the Treasury and say, hey, we're printed up a bunch of money and we're going to buy your treasuries from you. They can't do that. It's not within the law, right? What has to happen is the Treasury issues out these bonds, these Treasury bonds. The primary dealers, which are the big banks, they go to the Treasury, they buy those treasuries at auction. Then the Federal Reserve comes in and buys those bonds from the primary dealers. They cannot buy them directly from the Treasury. So whatever the Federal Reserve is purchasing to put on the balance sheet has already been purchased by the market already. So that means that they are not technically monetizing the debt, even though they print up money and buy the debt from the primary dealers who are guaranteed to know that the Federal Reserve is going to be buying them from them. It gives them, like, basically all the confidence in the world to go off and buy these treasuries because they're just going to sell them to the Fed who printed up the money to buy them anyway. So anyway, back to the central bank digital currency. If everybody was issued a digital wallet directly connected to the Federal Reserve, like we all have accounts at the Fed, them injecting money directly into those wallets by today's laws would be illegal. Like, they can't do that. So there's going to have to be some sort of change. Now, remember, like, during the pandemic, the Federal Reserve and the Treasury stepped up with unusual and exigent circumstances to introduce tools that nobody knew they had. Like, I mean, somebody probably knew they had them, but nobody knew that the Federal Reserve was going to have an unusual and exigent circumstance to create the special purpose vehicles to backstop the entire financial markets during the pandemic, and part of that being the corporate debt lending facility, which was nothing more than a credible threat to get people to buy into that corporate debt, which was kind of interesting. That couple that I was talking with yesterday, the financial advisor, they had their own term for credible threats. It was let me see, moral swaggin. If I said it right, moral swaggin. I thought that was really good. It's just like, you know, trying to persuade people into believing their talk or whatever it is. I forget how they defined it, but it was basically the credible threats, like we all know. And so they look for them too. And I thought that was pretty cool that they had that name, moral swaggin or whatever. All right, let's see here. Oh, so back to the central bank digital currencies. When they do release them, I have a feeling that it's probably going to come during a crisis situation where there would be like, I, I'm I think like it would be easiest if it was done through food. Like that would be the easiest way for people to just like beg for it, right? Because if you go hungry, you'll just like, I don't care. Like I do not care. Do whatever it is you need to. Just give me a ham sandwich, right? So that's where I feel like the Federal Reserve would have the best opportunity to introduce a central bank digital currency is if there was like some sort of food shortage, food crisis, or just a hyperinflation into the food. Then they could say, hey, go get your digital wallet. We'll load you up with all kinds of central bank digital currency, and then you can go out and buy all the food you need. So that would be like an easy way for people to, or for the Federal Reserve to get the people to just jump on board with it, is during like a situation where they're just desperate for it. The other way could be like just financial crisis, right? I mean, all of a sudden we have the financial markets freezing up and they're like, hey, we need to stimulate the economy. And the best way to do it, instead of going through this cumbersome way of distributing checks through the treasury, through debit cards or whatever, we're just going to load you up with central bank digital currencies. And then you can go out there and spend the money, stimulate the economy that way. So there could be like an emergency situation taking place where the Fed could have like the ability to purchase like emergency bonds from the Treasury. They have like these laws set up so that it would be an unusual and exigent circumstance that will give the Fed the ability to buy these things, circumventing the particular laws that we have in place right now. These are all just guesses, but it's stuff that I've heard other Fed officials talk about. So I'm thinking that's the direction that it would end up going in order to introduce those central bank digital currencies. Right on. Did I get another one down there? We did, from Jaws. Man, thank you so much. Jaws23100. Thank you so much for the 1999. No idea what tonight's chat is about. Having family night. Had to pop in and let you know I am 9 months sober yesterday. Yes, Jaws, right on. Good for you. Thanks for being an unexpected coach, Yui. Looking forward to my 1 year mark on January 9th, 2023. Dude, we are totally going to celebrate that day. I'm proud of you, man. Thank you so much for letting us know. And man, 9 months of sobriety. You've gone through the tough parts, right? I mean, those first 6 months are just incredible. After that, it really starts to you really start to get that clear head on why you did this. And man, I'm proud of you. Thank you so much for letting us know that. And we're looking forward to January 9th. I mean, totally looking forward to that. Let's see here. Did you see the Economic Ninja video covering bad car loans? I haven't, but I will go check it out. That is something that I definitely want to get some more information on. I know that the car situation is going to definitely reverse. These high-priced cars are going to come back down. You're going to find used cars getting much cheaper, and the new car market is going to get hit pretty heavy, especially if the interest rates stay elevated. Something I found interesting is that my Google feed landed a Camaro advertising. And not surprising because I talk about Camaros all the time now. But something I thought interesting, and I think for the rest of the month here, they have brand new Camaros with a 3% interest on it, which I thought was pretty low. Anyway, I'm not planning on buying one. Just, thought I'd throw that out there. That is showing that, some cars are just not selling as fast as they once were. Great stuff, man. 9 months is inspiring. It is inspiring, That is, I mean, it took me a long time. Like when I knew there was a problem, like I knew I had an issue going on, it still took a long time for me to finally give it up. And so, making that leap and getting into it this far, that's awesome. Corolla forever. Yeah, I probably will be, man. I love this car. It's like, it runs good. It gets good gas mileage. I don't have to worry about like somebody like scratching it or whatever, like being parked in the parking lot or something like that. Hey, thank you very much, Mr. Bioskunk. I like the name. Thanks for the $10. Thanks for your hard work. Well, I really appreciate it. Thank you for the support. Nice job, Jaws. Christ is king. Yeah, it's time to buy gold. Yeah, that's the thing about gold and silver. Now, you take a look at that. This is something that we've talked about a few times. Gold is the inflation safe haven, right? You're supposed to protect yourself from the failing dollar by buying into precious metals. And this is something that I have heard since the very first time that I had ever purchased a piece of silver. And I'm talking like back in 2008, 9 was when I started buying silver. And I thought for sure, that we were going into a hyperinflation scenario and I was going to protect myself with this silver. And when it ran up to $50 an ounce, I thought I was pretty smart. I thought, man, everybody should have listened to me. I'm the smartest guy in the world. But I didn't sell any at $50 an ounce. And it crashed all the way down into the teens. And when it got down into the teens and I realized that I was way under the value of the silver from what I had paid for it, I was very disappointed. It did not protect me from inflation. And in fact, it still hasn't. Never once have I ever been protected from inflation with using precious metals. Now, I know a lot of people are going to argue with me on that one. That's fine. You can. It just never happened. Not for me, right? Never once. So I don't look at it as a protection from inflation. I look at my precious metals as an insurance policy to have something tangible in my hand that's away from the third party. That's really what it is for me. It's that insurance policy to know that I can sleep at night and not worry about whether or not the app is going to work in the morning or if the phone is going to ring or any of that stuff. Like all that is completely away from the insurance policy. And that is truly how it has worked for me. The day that I had a broken down car, no way of getting to work, had come to I had no money, no way of getting credit, I had a box of silver. And I called up my buddy and said, hey man, you still got that Tahoe for sale? And he says, you know it. I said, will you trade silver? He says, absolutely. So you drive it up here? He said, I'll be on my way. He came up with the title. I handed him 165 ounces. He signed that title over to me and I went, that's pretty cool. That is pretty cool to have that. And I will always have that as my insurance policy. Now, I'm not saying that you shouldn't buy it to protect yourself from the inflation scenario. If you really feel that that's what's going to take place, go for it, man. I mean, it didn't work for me. I buy silver and gold, but I buy it for a different reason. I mean, you can buy it for your reasons, and I buy it for my reasons. In the end, we both own it, right? So what difference does it make? But that's the reasons why I do it. I don't look at the price. Never do I occasionally I look at the price, but I don't really look at the price to say, oh man, it's done this today, and I calculate how many ounces and all that. I don't do any of that. Did I see another super chat there? Nope, I guess not. All right, money is money, value is value. Yeah. I've bought silver at 6, 8, 12, 15, 30, 20, 27, 49, etc. It can be painful when it bounces around. Yeah, it sure can. Jaws, awesome. I have 6 years tomorrow. Well, good for you. Dishes every day. Oh, hey, that's my wife. You guys want to check out a cool channel? Go check out her channel. She does the dishes. When she does the dishes, she does a recording of them and does like these ASMR videos, and they're actually kind of popular. She gets quite a few views on them. So yeah, dishes every day. Precious metals are money. It's insurance for when the fiat currency goes bust. It's not about inflation insurance. Yeah, it's our money. It's insurance. It's not about inflation insurance. That's right. It's about regular insurance, like life insurance. Societal collapse is what will set stakers apart. Yeah, that's for sure. Again, that's an insurance policy. If you're doing it for like Mad Max purposes, that's like doomsday scenario stuff. That's preparing. That's prepper stuff. That's like, you got your spam, you got your bullets, you got your silver. That's. Let's be honest. Precious metals are for a lot of us is gambling. If that's what you're anticipating, if you're anticipating that you're going to become rich off of your silver, then yeah, that is a gamble. I'm not saying that it won't happen. It very well could happen. Silver goes up to $100 an ounce. There's going to be some pretty happy people out there. I'll be one of them. And there's no reason why it couldn't. I'm not saying that it couldn't do that either. I'm just saying, like, all the reasonings that I have ever seen that it should, it didn't happen. And I'm not trying to argue, like, saying that it's not, something that you should buy. I'm just saying, you got to do it for the right reasons. If you buy stuff like, and that's another thing, like, I'm not much of an investor. Like, you guys know that. When it came time to do investments, like, I'm like, okay, I'm going to be this investor. I'm going to do like day trading or something. I'm going to flip cryptos or whatever. I would buy into these things, and then I would like have this hope, like, oh God, and try to find the information that, would confirm my biased opinions on why this thing was going to go up and stuff. And I realized, man, I suck at this. Like, I sucked at trying to do day trading and, like buy low, sell high kind of things. And I was just terrible at it. Like, I don't know if it was just like my emotions were getting in the way or whatever. So that's when I just took on the mentality. It was just like, just be a saver, man. Dollar cost average into your stuff and just buy low when you can, or when you're thinking it's low, and dollar cost average in at the right timing, and sell the same way, dollar cost average out. And when I started doing that, I started doing much better. Like, I mean, much, much better. My savings went up, my stock portfolio started growing bigger, like I started holding on to more crypto. So like dollar cost averaging into a savings portfolio, buying at the better times, and then I don't really sell, right? I don't really have any reason to sell, but I don't really sell. I just try and buy at the best times I can and just accumulate as much as I can, and that's worked out pretty well for me. So being like not necessarily an investor, but a saver, that also gives me a different view of the economy, because I don't really care which direction it goes. Like, if the stock goes up, that's cool. I got stocks. If, precious metals go up, cool. I got that too. And cryptos or whatever, I got a day job. So if the economy starts doing well, then my day job does well. Like, I'm diversified in all kinds of ways, and I don't really care which direction anything really goes. So not caring which direction anything goes, I just look for information and then try to decipher, what it all says, and not have an opinion on whether or not that's going to impact my money or not, just more or less what's going to do to macroeconomics, if all that makes sense. I know I kind of babble sometimes, don't I? All right. That's a good way of putting it. Researching for biased opinions is a bad time. I've been there. Yeah, and that's what really happened to me with silver in the early days. Like I'm buying silver, and then I would just watch all these videos that would just pump up silver, and I never listened to anything else out there. All I wanted to do was just listening to people talk about how awesome silver was and how it was going to keep going up in price, and that's all I listened to. And so I just kept buying and buying and buying until it ran up to $50 an ounce, not really thinking about like the real impact to what's taken place in the economy. Like I was just focused in on silver and hoping that it would continue to go up. Best way to go is invest in good companies and write calls and puts to offset the losses in the bear and accentuate the gains in the bull. Mm-hmm. So again, I mean, that's like, a good investor, somebody who knows what they're doing and paying attention. Like, like you said, you got a strategy behind it all. Love your channel. I'm holding cash waiting for the crash to buy a new home. In the meantime, I am wondering if 3 months U.S. Treasury bonds are a good investment to make something in interest while wait. I mean, I think 3 months is pretty good. Like, I don't think tying your money up for 3 months is going to be like, I don't think anything's going to happen in 3 months that would require you to like, dive back into that. And over the course of the next 3 months, I don't know how much higher those U.S. Treasuries are going to go. Like, I mean, I don't think we'll necessarily hit a bottom in them as far as the price falling or the yields rising. I mean, I think we're pretty much to a point where it's not going to be a dramatic move from here. I mean, I could be wrong on that. We could see, many more percentage point moves, but I just feel that like the majority of what the market is anticipating going to be like interest rate increases has really been priced in already. Not saying that it couldn't go higher. Again, I'm not saying that. I'm just saying that I think the majority of it has happened. So, yeah, I mean, I mean, if you were asking my opinion on it, I think tying your money up for 3 months wouldn't be a bad idea, to get a little bit of interest off of it. UE, did we decide that the Fed has done enough? Oh, the Fed hasn't done anything yet. The Fed hasn't done hardly anything. They have got one interest rate impact to the economy at this point, right? The very first lifting of interest rate was what, like 9 months ago? So 6 months to a year before that starts to impact the economy. We're just now starting to feel the impacts of the very first lifting of interest rates. Come the new year, that's when we'll have that full impact of the very first lifting of interest rates, along with the other ones that are behind it. So we are just now starting to feel what the effects of lifting of interest rates does to the economy. If they have done too much already, they could cut their Fed funds rate all the way down to what, like 1.25% right now, and that's where the economy would be. This is where the economy would be right now, is at 1.25 on the Fed funds level. The Fed has hardly done anything at all. Like, done too much, and this was that painful. Just wait till the rest of these lifting of interest rates starts to impact the economy. You talk about some pain, we ain't even begun to feel it yet, you know? I mean, so no, the Fed has not even done enough yet. Like, the problem is that we haven't let the time lag catch up with what the Fed has done yet. So even if the Fed has done twice as much as what they've done, it still hasn't impacted the economy yet. So it's no, they haven't. Not in my opinion, they haven't done nothing. They haven't done enough yet. Hey UE, do you think the UN will get the Fed to slow down the hikes? No, I don't. I don't think the Federal Reserve could really care less about governments out there. I don't think that they are subject to political pull. I know a lot of people might argue with that. I just simply just don't believe it. Now, I do believe that the politics of yelling at the Fed and blaming the Fed and pointing the finger at the Fed and all that other stuff, I think that has a nice big impact on things. But the Federal Reserve doesn't care. Like, you're gonna go ahead and babble on all you want, right? I mean, threaten to fire Jerome Powell, like that'll make a difference. Like, that'll change what the FOMC is going to vote on, right? Like, by firing Jerome Powell, that'll make a difference. Like, a lot of people think that. They think, wow, if we fired Jerome Powell, this would not be the same. They're so wrong. Like, it would be exactly the same. The only difference is it would be somebody else up there talking instead of Jerome Powell, all right? He is nothing more than a spokesperson for the FOMC. He doesn't make decisions. Let's see here. Here in Brazil, I am seeing big increases of synthetic use of pesticides. Definitely seeing consequences. Many other countries are using biologicals and GMO that grow well in dry areas. Yeah, I could see that. You know, something that I really learned. My wife was working at a major grocery store chain, right? And she went to work for the co-op grocer. And it's amazing, like the difference, like just for one, just the stuff that they sell in the co-op. It's like, you know, everything's organic. There's no high fructose corn syrup anywhere in the entire store. It's all like, you know, super healthy, good stuff, right? And it's expensive as hell. But something that I noticed is that the food in there is not only like, you know, organic and expensive, but all the packaging is like kind of very plain, not shiny, no characters, you know, stuff like that. But the food is different. Like, the way the general public buys food from like from the grocery store chain, and the food quality that comes from that, and then you go over to like the co-op grocer, it really is. It's like going to a place that has, you know, like going to get a decent meal or food that's going to be healthy and organic and decent for you, and then the other place is like a food lot, like where they feed the cattle, right, kind of thing. And this is what I found in there is like, I never really noticed it before, but I actually took a point to, like, you know, actually look at packaging and look at like all the different parts that are happening there and the way that people are behaving when they're in these two different stores. It's just amazing. I mean, like, it really is. It's like in one store you have like cattle food lot, you know, like everybody kind of sits around the big bowl of like, you know, grain or whatever, and they're all like gorging off on this stuff. And then the other place is like picking out the nicer, picking out the most organic, picking out the fancy, all that other stuff. It is just like, it's just weird to see the difference in it. I don't know. Maybe I'm not explaining myself correctly on that, but it just goes to show, like, I think the farther you go up in money, like the more wealth you accumulate, the better you eat. And it's not only that, it's like the food that you get is much different than what anybody else is getting. It's, I don't know how to say it. Like, I don't know. Depending on the retail grocery store. Yeah. Do you think chances the Fed will go past 5%? I mean, there's a good chance that they'll get the Fed funds level past 5%, but I don't think they will have a 5% interest rate impacting the economy. Like, they might get it to 5%, but they're not going to let the lag after 5% go to the point that it would actually impact the economy. In fact, I don't think they're going to get much past 2.5%, 3%. Like, even though they might have the Fed funds level up past that, the impacting time of that lag. You see what I'm saying? Like right now, like the economy is experiencing somewhere around like what, a 1% interest on the Fed funds level from the lag. So it's going to be like what, somewhere 6 months, 8 months down the road from now, from the beginning of the year, to where that 2.5 Fed funds level had impacted the economy or hit the economy. And so the lag behind that, what am I trying to say? So like, I don't know, when did the Fed hit 2.5 on their Fed funds level? Was that like, I don't know, somewhere right about towards the beginning of summer? If I remember right, I would have to go back and look at that. 6 months to a year after that is where probably where you're going to see the Federal Reserve begin to their pivot, which is going to be somewhere around 2023, the summer of 2023. I'm assuming it's going to be somewhere in there. That's where it's going to happen, because that's where the impact of the 2.5% Fed funds level should have their impact on the economy. And I just don't see, because that's going to be neutral, right? I mean, you think about it, all the slowing down and everything else, we haven't even gotten to neutral yet on the Fed funds. It's still a stimulating economy, still stimulating monetary policy. Isn't that funny? I mean, a lot of people don't even realize that. Until the Fed funds level actually has 2.5% impacting the economy, it's still stimulating the economy. And that's, I mean, I know the markets aren't behaving that way, but that's the economic impact that has taken place. And so it's going to be a while yet. Like, people don't even know how painful this is going to get. Brr, machines be overheating. No, they turn them suckers off, man. They're about ready to be put on ice. You know? And then they're gonna reel in all that irrational exuberance, and all these people who have overextended themselves on debt are going to be screaming at the Federal Reserve saying they're causing all this pain on purpose to people, and they don't need to be doing that. And they should have been prepared. Like, they shouldn't have taken out all that debt during the hyperinflation scenario that they knew was coming. All right, hi UE. Hope you're having a great day. What do you think will happen to the dollar if Japan starts selling their U.S. treasuries? Well, we talked about that just a little bit earlier today. Again, like, I do not feel that they're not getting out of the dollar because they don't want it, right? They're getting out of the U.S. treasuries because they're trying to get a hold of dollars so that they can buy their currency to keep their currency from falling any further. That's demand for dollars taking place. That's not them trying to get out of the dollars. That's them trying to use the dollar to strengthen up their currency by getting as many of them as they can to buy their currency back. So I again, like, I see the dollar strengthening from here. Like, it's going to continue to strengthen for a while. Like, until the Federal Reserve actually does a pivot, their dollar is going to continue to strengthen. There is nothing out there that tells me that it's going to do anything else but that. That strengthens the dollar. It does. Yep. Hey, good evening, all-nighter. When they pivot, do you expect to look as aggressive as they are hiking now to bring it back down? It's probably going to be, I would assume, and just as totally assumption, that it's going to happen in a way that is going to force them to bring it down. Like, we need to stimulate the economy by, dropping of interest rates. When they do it, it's going to happen quite quickly. Like, they will do it fast. It's not going to be like this, slow, like, incremental thing that they're doing right now as they're lifting it. It's not slow right now what they're doing, but like in the past when they did the 25, quarter point interest lift every quarter, the autopilot program, I don't see them doing that on the reversal, like going down. It's going to be like, oh crap, we got problems. We need to come out with this digital currency, and in order to stimulate the economy, we need to drop interest rates back down to zero again. that's going to be probably more of like a scenario that's going to take place. I don't see it being like a slow draw back down to the lower bound again. It's not. It's going to be a hit, bang. Let's see here. True plus garden plus guns. There are no great answers. No. Good evening, Simon and everyone. Well, good evening, all-nighter. How can the dollar work out? Dollar on roids? How can the dollar work out? Dollar on roids. Well, okay, so inflation is the expansion of money and credit, right? That's really all it is. The prices are the symptom of that. So if you have, for one, the Federal Reserve backing off on their money printing and actually going the opposite way and reeling that money in, that's quantitative tightening, right? So that's tightening up of the currency. That's going to strengthen the dollar. But even if the Federal Reserve sat on their hands and said, hey, we're not going to do any of that. We're just going to let, whatever is out there is going to stay out there. We're just going to have all that. The dollar can continue to strengthen if people are getting out of their dollar denominated debts. Because you think about it, there's a lot of debts that are due in dollars. And those debts that are due in dollars get used as if they're dollars. Well, if they didn't exist and they wouldn't be used as dollars anymore, that's less dollars in circulation. Again, the dollar continues to strengthen. This is the euro dollar situation. There is no situation right now that I see going into the future where the dollar doesn't get stronger. Like there's none. Like none. Even when the Federal Reserve was in the midst of their quantitative easing, I was saying it then that you're going to see the dollar strengthen at some point, right? And it's really difficult to understand that, especially like trying to wrap your head around where does this quantitative easing go? Like where does the money go? Because a lot of people say, well, the Federal Reserve just straight up bought stocks with it. No, they didn't. Like they didn't do that, What they did is they made money cheap. They made money essentially free. So you could borrow as much of it as you wanted, and you didn't hardly have to pay any interest rate back on it. That is how people were able to borrow money and then start injecting that stuff into the stock market. So if you want to say that the Fed put money into the stock market, well, they did it through the people, right? I mean, that's how it happens. I'm saying all time spent on allocating our shekels properly is inferior to focusing on providing local food supply. Desperate people will do desperate things, so be vigilant. Yeah, that is very true. And it's almost kind of scary to think about that, once you go hungry, that's it, man. I mean, if you are hungry, it's on. Like there is nothing outside of the capabilities of the human to get food. Like they will kill for it. So yeah, when it gets down to that point, that's the scary situation because yeah, desperation is bad. All right, I'm switching to fiat for a while. Credit cards are becoming too much. Yeah, I do have some credit cards, and I use my credit cards with the, if I can get a 3 or 5%, cash back on them, I pay my credit cards off every month, so I don't roll any debt over. So I do get some money back on my credit cards. So I do that a little bit, but I don't use credit cards for the credit itself. I just use it for convenience. And, I had really bad credit for the longest time, so I used credit cards to build up my credit, which was pretty easy to do, really. A lot of people don't know the secret to using a credit card to getting your credit up, but really the secret is to not pay it off. Like if you make $100 purchase on your credit card and pay $95 of it off, right? And let the $5 roll over. So it doesn't matter how much is on the card, so long as it shows that you're making payments on it. That's what they're looking for, is that regular, monthly payments that you're making on it. So just pay off everything but $5 every month on your credit card, and your credit rating will just start skyrocketing after that. And that's what happened to me anyway. All right, thank you very much, Brandon, for the $9.99. I've learned a ton from your channel. Appreciate your work. Thanks. Well, thank you. And I have to tell you guys, I have learned far more from you than you have learned from me. That's for sure. I mean, coming out here every day, trying to put new videos out, doing the research, reading the comments, and getting your guys' input back from it. I have learned so much about the economy since I started this channel. It just blew me away. I mean, I thought I knew, a decent amount when I started the channel. I look back to my earlier videos and I'm like, man, I didn't, holy moly, things have gone a long ways. So thank you very much for the $9.99. I really appreciate it, man. Food producers get paid virtually nothing, in my opinion. All the money goes to distributors and sellers. Yeah, I know that one. I had family from Wisconsin, and like the dairy farmers. It's terrible. Like what ends up happening in order to keep the milk cheap and stuff, the subsidies that come from the governments. It's a horrible game to play. Let's see. I pay my credit cards off 100%, and my credit is 810. Yeah, mine's like 810. Like I do pay them off occasionally. Like I just pay them all off. But when I was trying to build my credit up, that's what I did. I just make $100 purchase with it. Like I wouldn't buy much, and then just pay and all but $5 of it off. All right. Will crypto be regulated into the ground after the CDW? I think CBD come out. Or will the ones with VC backing the only ones allowed? Is the digital asset game coming to an end? No, I don't think it's coming to an end. There's going to be some really good projects out there that do really well. Are they going to regulate it into the ground? Probably. The only thing is like, just like anything out there, think about anything that somebody wants that the government makes illegal. Sex, drugs, guns, whatever it is, right? Doesn't matter. If the people want it and then the government makes it illegal, that adds value to it. With risk comes reward, right? So if they really want cryptocurrencies to be worth a lot of money, make them illegal. I mean, people want them, right? So if people want them and they make them illegal, prices go up. That's just all there is to it. Look at marijuana in Oregon, right? Oregon has always been really, really like laxed on their marijuana laws. Since the 70s, if you had an ounce or less in your possession, it was a misdemeanor, right? They issued you a ticket, confiscated your weed, and away you went. Like nobody went to jail, nobody lost their lives, livelihoods, or all that other stuff. That didn't happen, right? You paid a ticket, you moved on your way. So here in Oregon, like weed is everywhere, like everywhere. And when it was illegal, there was people who made some pretty decent money selling it, right? I mean, I knew quite a few guys who did that. You grow it grow it out in the woods during the summertime, and you would have a nice little fall bonus and Christmas money or whatever. I mean, this is what a lot of people did. I mean, it was like common. So when it became legal, all of a sudden, like the price of it went like it became worthless. Like everybody grows it, everybody has it, and then it became legal and everybody started, getting into the game. It became like a sea of green. It practically spills out on the ground. Nobody cares about it anymore, and it doesn't have any real value to it. The only way that you could really make money here in Oregon, right? And I mean, I've talked with, people who work at the dispensaries and stuff. Really, you have to grow either highest quality weed so you can get the top dollar for it, or you have to process it, turn it into hash or make edibles out of it or something like that. The actual growing of weed for profit is very difficult. I mean, hardly anybody is like, jumping into the game and able to just like, woohoo, look at me make all this money out of it. I mean, it isn't like that. It was when it first became illegal, like everybody was like first getting that initial rush, but it only took a couple of years and then the whole market was completely flooded. And now it's like, nobody, like there's people who don't even want to be in the game anymore, and they're like, man, I'm getting out of this. Yep. So if you want to make something valuable, take something somebody wants and make it illegal. Let's see here. People would be getting locked up left and right, center for falsifying currency if crypto is illegal, like fake bills, for example. Yeah, something to think about. Hey, Scratchy, what's happening, man? There was a dude here in DE who was serving life for 3 strikes. His 3rd strike, he was caught with a joint. Damn. See, that's what blows me away. Growing up here in Oregon, like it just blows me away when I hear these stories about people who have like, go to jail for like even just go to jail at all, even just to get processed and bailed out for weed. It's just like, I mean, unless they had like, tons of it or they're selling it or just like a massive production or something going on, like people don't get in trouble for weed here. Like I don't get it. Like I mean, I don't know. It's just like, I mean, to go to jail forever for a damn joint or for years even, like that just, it, like I understand, that you need to punish people for committing crimes. And if it's a crime, it's a crime. But shouldn't like the crime fit, I mean, the punishment fit the crime? Like it's a damn joint. It's not like, it's proven that people smoke joints and goes and murders other people. It doesn't happen like that. It's not like you can smoke so much weed that you black out and start, creating havoc throughout, the town or something. That shit doesn't happen. Like, people who smoke weed are mellow people who don't do anything. It just blows me away that that happens. Let's see here. Life for a joint. Yeah, sad. No injured party, no crime, right? Can you show me the injured party here? All right. And the state cannot be the witness or the prosecutor. Yeah, I thought about that one too. It's just like you go, because, that's something that, as the sovereign citizen, when I was doing the research into some of the sovereign kind of stuff, that was one thing like, if you can't find a damaged party, like, you get pulled over and, you're speeding and you got this ticket, right? And you go to the judge and they say, hey, are you guilty of this? And it's just like, I want to know who the injured party is. And they say, well, the state's the injured party because you were driving so fast, so you need to pay the state this fine. And so not only is the state the injured party, but the state is also the one who is judging me. Well, that seems like a conflict of interest, doesn't it? I mean, so this is the type of stuff that occurs out there that you have to really try to understand the legal system and to have the injured party be identified and what that damage is. Like, can I make you whole again from the damages that I have done? Like, if I ran over your mailbox, well, then I owe you a mailbox, right? I mean, I need to make you whole again. I need to replace this mailbox and make it right again, right? But if there was no damage, I mean, I'm out here driving, all of a sudden I'm not around anybody, all of a sudden a cop sees me and pulls me over and he was like, hey, you damaged the state, you owe the state for, the fine. Well, it was like, what did I do? How did I damage anybody? So I'm not saying like, you got to prevent these laws to keep people from driving 100 miles an hour and wrecking into somebody else. But I guess all I'm saying is like, unless there's an actual damage taking place, where's the crime, right? Like, how do I make you whole again if I didn't actually take anything from you? Ah, damn it. We got this damn scammer. How do I get rid of him? Hold on one sec. Let me get rid of this guy. Oh, it just won't come up? What's going on? I can't figure out how to... Oh, there we go. Okay. Hide user on this channel. Bang. All right. Hopefully we won't get any more of those. All right. Hit that like button. Yeah, please do. I haven't asked you guys to hit the like button. There's 394 of you in here, 220 likes. Let's get that up to 300 likes. The algorithm will spread the video around a little bit more. I'm going to be out here for, let's see, probably another 20 minutes or so. We'll do an hour and a half out here, and then we'll move on. Where's Lord Humongous? Yeah, no kidding. He should be out there knocking these guys out of here. All right. Do you think we will see credit problems like the UK bonds recently? Credit Suisse, credit default, volatility explodes, high yield bond crash. Yes. I think the entire world will eventually run into a sovereign corporate debt crisis. I think the United States will be the last one into that game, just because we're going to end up being the safe haven as everybody else is scared about their own currencies and everything that's happening. They're going to look for the safest place to go to, and unfortunately, that's the United States. So they're going to get into our bonds, our stocks, our dollar, everything that's going to be moving towards the United States. Now, that's history that's been saying that, right? This is the way that it generally goes to. We have a little bit different situation right now where people are very fearful of the dollar, but that's really only in the United States. Everybody outside of the United States still is quite excited over the dollar and wants to get into it. Doesn't mean like countries like China and Russia and Brazil and all these other people are coming up with systems to get out of it. That is true, that's happening, but for the short time, this is the way it's going to go, and it's going to happen for, I think, for quite a while. Yeah. But as far as like here in the United States, yes, we are going to see corporate debt crisis. I don't think it's going to move into the corporate debt crisis of the viable corporations, like the ones who are really well established and doing well in profits and sitting on cash balances and stuff like that. It's going to be all the zombie corporations, and I think the Federal Reserve is very much intent on knocking the heads off these zombies in order to get the unemployment to rise, which is really odd to think about that they actually want to raise the unemployment. But that's how they're going to try and combat the inflation. If more people are unemployed, that's less people spending into the economy. And with less people in the economy spending, that has the demand for these goods coming down. And if the demand comes down, prices should come down with it as well. So that's kind of the idea behind the Fed. Whether it works or not, that's a whole other story. It's so bright out there. Yeah, well, we're out here on the West Coast, so we still got another hour or so of daylight. Hey, Slick. What does it mean when the Bank of England is setting up a repo facility? Well, it means that, well, okay, so the repo facility, this is something that's funny. I did a video called Things Are Changing, where I was talking about the repo facility, the standing repo facility here in the United States or from the Federal Reserve before the Federal Reserve had that standing repo facility. They knew that they were going to run into an issue in which that they had to have this repo facility. And if you're not familiar with what this repo facility is, it's not like repossessing cars, right? Like, something like that. I mean, it's sort of like a repossessing a car, but not really. What it is that the Federal Reserve has a standing repo facility that will either inject money or pull money out of the banking system. So if you remember back in September of 2019, the banking system actually froze up. And a lot of people don't realize the financial market actually froze up. And it was the overnight lending rate that had actually gone haywire. So at the end of the day, the big banks like the JP Morgans, Goldman Sachs, all those guys, they have a balance that they need to come up with, right? So they have some of them would be in need of reserves, some of them had excess reserves, right? This is the old school of the way it went down, but it's the easiest way to explain it. Because things have changed since then. But anyway, this is the easiest way to kind of explain it. So at the end of the day, the big banks would need to, some of them would have excess reserves, some of them would be in need of reserves. So the ones who had excess reserves would lend them to the ones who were in need of reserves so that the next day everybody could open up and, be ready to operate. That lending that took place from the ones who had excess reserves to the ones who were in need of it, that was the overnight lending rate. That overnight lending rate was the effective fund rate. So when the Federal Reserve says, hey, we are trying to establish interest rates to a particular level, what they were doing back then was they were changing that overnight lending rate by buying and selling treasuries off the big banks until they could get that overnight lending rate to land within the Fed funds rate, which would then be the effective fund rate. Does all that kind of make sense? Anyway, okay. What happened in September of 2019 is that there was some banks out there that says, okay, guys, we need some reserves. Who has the excess reserves? And everybody's like, we ain't got it. Sorry, there's not enough cash here. And they're like, what do you mean there's not enough cash? Well, see, the government's been doing a lot of spending. And when they do a lot of spending, they issue out a lot of treasuries. We're the primary dealers. We're the big banks. So we end up buying these treasuries and hold them on our balance sheet. Now, holding treasuries is almost as good as cash because they're kind of like the same thing. I mean, you could liquidate a treasury just as quickly as anything. So it's pretty close to being cash. And so these big banks were holding treasuries because the government was spending so damn much money, right? Spending so much. But at some point, they do need cash because cash is kind of like, I don't know how to phrase it. It's kind of like the lubrication for the system, right? There are some days when you don't need somebody else's debt. You actually need the cash and not in somebody else's treasury. So what ended up happening in 2019, in September 2019, was there was this huge corporate tax payment that had taken place. So all these corporations paid their taxes. That took cash away from the big banks and moved it over to the general treasury account, right? Which is an account set up at the Federal Reserve. So all this cash right then had left the banking system without enough cash. So now they can't operate, right? So the guys who were in need of reserves were looking for the ones who had reserves. There wasn't anybody who had reserves. And the Federal Reserve says, no worries. You guys are loaded up on treasuries. we're going to open up the repo facility, and what we're going to do is we're going to take those treasuries off your hands and we're going to hand you cash so that you can operate the next day, and then we'll swap that out, and the next day we'll do it again, and we'll just keep doing this over and over again so that you guys have plenty of cash on hand to operate. Well, this standing repo facility was only meant to be used. I mean, it wasn't a standing repo facility at the time, it was just a repo facility, but it was a pressure relief. It was only meant to be used in case of like a little emergency or something like that, where, you know, a situation like that came up. But they knew back a long time ago, I mean, even in that video that I had put out, things are changing, that they were going to have to set up the standing repo facility, and that they were going to have to inject cash into the system. This was the non-QE QE. Remember when they talked about that it wasn't technically QE, but it was essentially QE because they were injecting money into the system by swapping out these treasuries for cash. And then the exact opposite happens now too, because what it is that there's too much cash in the system. And so what they are doing is, like, there's no place to park this cash and get a, you know, return off of it or whatever. They need a place to put it. Then the Fed steps up again and says, here, give us the cash, we'll give you treasuries, we'll do this reverse repo thing. Right? So that's what the standing repo facility was all about. They knew that they were going to end up having either, one, not enough cash or too much cash in the system, and that they would have to figure out a way to either sponge it out or squeeze a bunch more in. I mean, I don't know how else to describe it, but that's essentially what the standing repo facility had done. And again, this is all part of, like, the Federal Reserve knowing that all this was going to be taking place, because how else was I able to do a video talking about the standing repo facility before it became the standing repo facility if it wasn't for them saying, hey, we need this in the future? So yeah, that's why we have it now. Question, Simon, would you consider doing a video with QTR Chris Irons? Yeah, absolutely. I'll do a video. I will talk with just about anybody out there. I mean, when it comes to doing a conversation or a collaboration or something like that, I would love to talk with just about anybody who is willing to speak with me, and, you know, sit down and take the time, and I'll take the time with them, you know. All right. His podcast is excellent. All right. Well, thank you guys. Yeah, for the suggestion. I mean, I would love to check that out. Do something like that. What do you think happens at midterms? Market reaction implications? I don't know. I do not care what happens in the politics. I don't. Like, and here's the main thing. The more I started realizing and studying economics and fading away from politics, I realized that the more you study the politics, the less you'll get a grasp of economics. Like, I mean, at least for me, that's the way it was. Like, I never was able to pick up as much about economics until I finally gave up with politics. I said, I am not paying attention to these people anymore. I don't consider them for anything at all. And man, did the floodgates of knowledge and the economics really start to open up after that. And I think probably the main reason behind that is that, like, even Cantillon had said it, like, the behaviors of the politicians is more in response to what's going on in the economy, not the economy reacting to the behaviors of the politicians. Does you see where I'm kind of getting at? Although they make a lot of noise, they do a lot of stuff that does have, like, an impact to people, like an individual or something like that, or maybe to, like, you know, a group in society, you know, like, say with, like, you know, welfare benefits or something like that. But the overall direction of the economy or impact to the economy, they have very little impact of it. Wars, depressions, all this other stuff, this isn't the reactions of, like, the politicians that did it. This is the economy and the reactions to the economy that's happening. So what happens in the midterms, I don't really care. Like, I don't know. I don't care. Like, I really don't. What I'm going to be more paying attention to is the direction or the narrative that people have about the monetary policy coming from the Federal Reserve. That's what I'm going to be paying attention to. Like, I gave up on politics. I just don't care. Like, I've never, ever have listened to Biden. I've never listened to a single thing he has said, ever. Like, if he comes on, he's talking, I turn it off. I just don't. And, you know, even with Trump, like, I mean, I listened to a few things he said, but I was never much of a Trump supporter. I liked candidate Trump. I really liked a lot of things that candidate Trump said. But while I was sitting there listening to him, you know, before he was president, saying his things, and I'm like, you know what, bro? You're talking a lot of crap about the Fed, and you're talking a lot about the markets, and you're talking a lot about this stuff, and you are going to reverse. You are not going to end the Fed. You are going to definitely pump up the markets. You are going, like all this stuff that he said was going to be bad, and he was going to return. He didn't do it. He didn't do it, right? I mean, it was a big, fat, ugly bubble, and he turned it into a big, fat, uglier bubble, right? He said that the Federal Reserve should be printing money, right? You remember this? The Fed should be printing money, right? There's no inflation. Just think about had the Federal Reserve followed Trump's lead and printed money. Think about the hyperinflation scenario that we would have ran into, right? It wasn't a game of him wanting the Federal Reserve to lower interest rates or to print money. What he was doing is he was lowering the inflation expectation and raising the real interest rates. That was the goal, and it worked swimmingly. Him and Trump and the Fed worked swimmingly together to create that situation. Lower the inflation expectation and raise the real interest rates. That's exactly what he had done. So, I mean, they don't fight. There is no fighting. Everybody in that game is all on the same team. They are all working together. There's very little doubt in my mind on that. Everyone tell Joe Rogan to get UE on. I would love to be on Joe Rogan's podcast. I think Joe does a great job on his stuff. I've been listening to a lot of not a lot of his interviews, but a lot of the shorts, because I just don't have time to listen to hours upon hours of videos anymore, because I'm doing too much research and spending with my family. But I have been listening to some of the short interviews that pop up on YouTube and stuff like that. And man, Joe has really got a great show. He comes up with some really good people to interview, and just the topics that they cover are just excellent. I'm a big fan. It's all about the Fed, yeah. Great point, dude. Reactionary predictions on how long they will continue to raise rates. I don't know. I think they're going to raise rates up to that 5%. I think they're going to really try and get to the 5% on the Fed funds level. They're not going to let 5% on the Fed funds level actually impact the economy. They will drop them down before, like if they hit 5%, I don't think they would have it there for more than a couple of months or something like that. Most likely they're going to have to reverse at that point. Like anything beyond 2.5% is like restricting the economy. And even though we have the Fed funds level up above that, it hasn't gotten to the point where those interest rates have started to impact the economy. So just look back at the Fed funds rate and find where it hit 2.5%. When it was in July or something. I can't remember exactly. I'll have to go back and look. Find where it hit 2.5%, and then 6 months to a year after that is most likely where we're going to find the Federal Reserve begin their pivot. So I'm thinking somewhere towards the middle end of 2023. That's what I'm thinking is going to be when the Fed makes their move. I could be completely wrong on that, right? I mean, but if I was to guess at a timeline, and things might change. There could be something that happens within the economy or situation or something that would completely change that outlook. But if I was to guess from what I see occurring today, that's what I would guess. What time is it? Let's see, an hour 22 into it. Alrighty, guys. I'm going to give it another 10, 15 minutes or so, and then I'm going to head on home. Let's see. Dot plot says 4.5%, but we will see. Yeah. Let's see here. Until inflation takes a dump. All right. Economy comes back with a big war. Are they not restricting the economy in order to help fight future global climate disaster? No. All right. Remember, Trump is the king of inflation. Remember, inflation wipes away your debt. UE, safe job careers. Working for yourself. I think that's the safest thing that you can do. Figuring out multiple forms of income that you can do on your own. I don't know exactly how to make those things happen. Rental incomes, dividend paying stocks, YouTube channel. I don't know, like figure out ways that you can make money while you're sleeping. Like there's no career out there. Working 9 to 5 or working for somebody else, there's just simply not enough hours in the day to earn enough money. So unless you're making a commission or something off of it, or just some killer bonuses for working hard or something like that, there's very little jobs or careers out there that will provide you with a substantial income, like something that's going to be like just absolutely killer. The only way to really do that is to figure out something that you can leverage your time so that you can be earning money while you're doing something else. While you're sleeping, that's the easiest way to kind of understand it. So if you can figure out a way to earn money while you're sleeping, and have multiple ways of doing that, that's going to be the ultimate way. As far as like picking a career path, like go and be an electrician or something like that, I don't know. Like I really couldn't tell you which is going to be the best career path or something like that. In the short term, like say the next 20 years, I mean, I guess that's not necessarily short term, but if you're like, somebody who's a kid looking to find a career path or something to follow, I don't know if this would be exactly it. But over the next 20 years, I could really see where the need for in-home care is probably going to be pretty heavy. There's going to be a lot of the baby boomers retiring and needing assistance, and that's probably where there's going to be a lot of demand. So, that could be one career that I don't think is going to go anywhere. I think people like the retirees out there, so long as they have their pensions, then they'll be able to pay for somebody to take care of them. Thank you so much, Evan Dixon. Radio Made Easy for the $5. What do you think about ham radios for emergency preparedness? Well, now I think that is an excellent way to go about it. I used to have a buddy. His dad was big into the ham radio operations and stuff. So I think that's an excellent way, because like if communications go down, who's gonna do the communicating? The only people who are gonna have communications are people who have radios, and it's gonna be the ham radio operators, and in like closer, those who have citizen band radio. But that's going to be the communication. So for preparedness, I think that's an excellent way to go about it. But again, you're going to have like the network built up, right? I mean, obviously you can find other people out there, but knowing other ham radio operators and being able to communicate like with a chain of people across the country will give you like the ability to communicate, right? From one coast to the other. That's going to be incredibly useful if there's like a major power grid, takedown or something like that. So yeah, CB radios, ham radios, even just walkie talkies. I mean, having anything that's going to be a communication device is going to be very useful. Of course, walkie talkie on a much limited basis. Boy, you guys are really into the radios. That would be a fun hobby to get into. Yeah. If you need radios, we can help. All right. Well, yeah, check out Evan Dixon Radio Made Easy. I mean, that's definitely something to look into for prepared for being prepared. Any programming knowledge will prepare you for the future. Everything runs off of code. Yeah, I can see that. Seriously though, think about the UE. Trump has massive debt, and the higher the rate, the more his assets and property is worth. Therefore, leverage equals liquidity. Trump loves inflation and always has. Well, let's see here. If someone has the time to buy a house, would you buy when prices come down but interest rates are high, or wait longer until interest rates drop again? Okay. First, you have to be convinced that there's going to be a housing market crash to begin with, right? And in order to get the best deal on the home prices, I have very little doubt in my mind that prices will come down on homes, but I don't know if we're actually going to see a significant crashing of the system, like, where you see like home prices come down significantly below their mean price, right? So if you have like a house that's elevated in price, it's gone up, $150,000 in the last 2 years or something like that. If it drops $100,000, is that a crash, or is that a returning to normal? Like in a normal market, you wouldn't have $150,000 rise in price. But if it does come out of there, would that be returning to normal, or would that be a crash? So that's the way you would have to look at it. I mean, in regular market, if you see $100,000 come out of a $400,000 or $500,000 house, you would be like, holy crap, that's a crash, right? But when you have a $400,000 house that's gone up $100,000 in a year, watching the $100,000 come out of it really would just be a returning to normal and not necessarily a crash. So that's really the difference in it. Like, I mean, are you really anticipating there's going to be like a crash of the system where you're going to get like pick up a property for an incredibly good deal? And then if you are, and you do take out a mortgage for that, and you're anticipating that there's going to be interest rates falling into the future, well, then pick it up at that on that high interest rate mortgage, because you're pretty confident that it's going to be dropping into the future. You can refinance it cheaper and cheaper as it goes down. So not only do you get the best price on it, but then as time goes on, you can just keep refinancing it and getting a cheaper and cheaper interest rate on your home. That would be the best scenario plan possible. Whether that happens, if that's your strategy, I mean, go for it. I couldn't tell you if that's actually going to be the case. I have a feeling that home prices aren't going to come down as much as a lot of people are anticipating they're going to. We didn't have a massive overbuild. Like, that didn't take place. So we didn't have like so many homes that there's no demand for them. It's not happening, right? There's still a huge demand for homes out there. And even though we do have the home prices coming down, they're not coming down significantly. And the new construction that has taken place, like the new home permits and starts, that has backed off dramatically. So the new inventory coming into the market is not going to be coming from the new construction market, not in a significant way anyway. And then the new, like, not, what should I say? The flood of sellers trying to take advantage of that price, that's probably not going to be as high as a lot of people are anticipating, because, again, because of the interest rates, right? You're going to sell your house now that you have a 3% interest on, so that you can go buy another house that has a 7% interest. You see where I'm kind of getting at there? Like, that doesn't encourage people to go and buy another house out there on loan. So again, like, that's not going to necessarily bring a significant amount of inventory in. What will bring a lot of inventory in is if we see layoffs. Layoffs will bring foreclosures. If people start losing their jobs, they won't be able to make their payments, and if they don't make their payments, they'll start going into foreclosure. We haven't seen it yet. So the unemployment hasn't begun to rise yet in a significant way. If we do see that, if we see unemployment rising in a significant way, interest rates staying elevated, and then again, like, more people maybe going into foreclosure or selling that inventory onto the market, if we see stuff like that happening, then okay, yeah, we might see housing market crash-ish kind of thing. But I just don't see it taking place. Like, all those things are not coming into the plan that I would see needing to take place in order for there to be a huge market crash. Is there going to be a slowdown? Absolutely. I mean, you can see it happening already. You can see prices coming down, but again, we're going to see unemployment. That's going to be like the next one for me. If we see unemployment rising significantly, watch for foreclosures. You start seeing foreclosures rising, you're going to see the prices come down. All right. What kind of people do you think are holding homes? Like, holding on to homes and not selling them? People who are looking for rental incomes, and institutional investors who are also looking for rental incomes. Rents are hardly coming down, right? I mean, there's some areas I'm starting to hear about some like rentals that are not going up any further, and in some cases like even coming down, but that's still like, I'm thinking that's not exactly the most accurate information. From what I'm hearing out there, rents are expensive, continuing to be expensive. They're not coming down, and they're difficult, right? So if that's the one thing that seems to be elevated out there, I mean, look at all the other assets out there. Like, do you want to be in the stock market? Do you want to be in the bond market? No. Where do you want to be? You want to be in just real estate, just owning real estate? Or do you want to be in rental incomes? Because that's not coming down. That's staying elevated. So if you're going to looking for return on capital investment, it seems to be rentals are the place to be, and the institutional investors are getting into that. And, I don't see any reversal to that yet. People with cash will benefit from cheap homes. Banks won't give loans in this liquidity crisis. Yeah, cash flow, domino effect. Yeah. EE, should I sell my house if I am close to a military base? Um, I don't know. Like like being close to a million, what would be the significance of that? Like why would that be an advantage for you? I mean, are you going to be able to live on the military base, or is it just being like the location itself being something? I mean, I'm not sure what the question would lead to, like why that would be significant. Hey UE, what do you think of the tight labor market, quiet quitting at the moment, and do you think this will speed up the recession? Yeah, we've talked about quiet quitting in the past, and because this is something that like I've even experienced. Just like I did it, like I didn't mean to. I just had like stuff going on in my life, and I just wasn't really excited about being at work, and I needed the paycheck, so I had to show up there every day. But I was just a body showing up, and like just performing just enough to keep from getting fired. And I mean, I'm not proud of that time in my life, and and I really have to give it to the to the people who are around me because they put up with quite a bit, for dealing with that. But I have experienced something that on my own, but it wasn't because I just like quiet like I'm thinking, well, I'm just going to give up this job and I don't want to go look for another one and I'm just going to stay here and quietly quit. I think that's just more being just ultra lazy than it is like doing this quiet quitting thing. But um is it going to have a drag on the economy? Yeah, it sure will, especially when people start losing their jobs and there's no job to go to. Like if you can't find employment and you lose your job, the quiet quitting thing, that'll come to an end because people are going to wake back up and they're going to go back to work because if they have difficulties finding job and they're on the possibility of getting fired, yeah, that quiet quitting thing will come to an end, because everybody needs money. I don't care who you are. Like, you can't just say, like all these people are like, I don't want a job. I'm not going to work. What are you going to do? Like, you're not going to work. What are you going to earn some money, man? You can't just, like, not work. I mean, I guess some people can, but it doesn't work out for most people. All right. Quiet quitting isn't a new thing. It just means not caring about your job anymore. Yeah, essentially, that's what it means. A lot of people make $40,000 a year working their asses off and finally asking themselves why. What else are you gonna do? Like, I mean, that's the other thing. Like, people are like, they say, like, I don't want to work, and I'm like, yeah, I mean, shit, I don't want to work either, and they say, well, I feel better at home than I do at work. And I'm like, I feel a million times better at home than I do at work. Like, a million times better. But I like to eat, right? You gotta pay your bills. You gotta go and do something to earn money. And all jobs suck. Like I don't like there ain't ever been somebody like very few people come up and was just like, man, you wouldn't believe it. I got the best life in the entire world. And my job, excellent. Like I cannot wait to show up to work to be there for 8 hours. This is the most exciting thing in my entire day. Like nobody says that, right? Work sucks. Always has. Like for anybody, I don't care what they do. They could even have a job they like. It still sucks because you got to do it, right? I mean, ugh. Don't mind working. It's paying taxes that pisses me off. Yeah, I hear you there, Scratchy. I hate paying taxes. I love my job. Yeah, I like doing sales. Like I like working at the lumber yard. I mean, it's like if I'm gonna do something, that's something that I enjoy doing. But if I could get away, well, I mean, I guess I could. I'm making the choice to stay there. I mean, I could really leave if I wanted to. I mean, it wouldn't be great, but I could. But I enjoyed doing something with my day. Like, I like working with the customers. I like, doing the things that I do. But it's not like, if I had my choice in the matter, I wouldn't do it. You got to balance it with perspective. Could be in a hut in Africa, right? Actually, I did really love this one job. Yeah. That's why it's called work. It's not called fun. Yeah. I need a democratic school system. I love my job for the most part. I look forward to it. Yeah, I do too. Like I look forward to going to work. I mean, I enjoy the people I work with and I enjoy the job. So, I mean, what I didn't like I had a job that I really didn't like. It was the same job. The only time I didn't like it is when it was wintertime, right? because I loved framing houses. I mean, framing was so much fun to me. 3 months out of the year, it was by far the best job. Like, I just loved doing framing carpentry work. That was the best. But wintertime, and it's dumping buckets, and you're working in rain gear, and it's hard, and it's heavy, and it's cold, and it sucks. I mean, framing in the middle of winter sucks. It's a terrible job. So it's funny how the same job is like both my favorite and my least favorite. I work from home and enjoy what I do. I'm in IT, yeah. I love to be in Hudson, Africa. Minimalism is not poverty. Minimalism is focusing on the necessary and sufficient resources that serve you best interests. The fewer things that you own, the fewer things that own you. And I can agree with that. Like, I have very little possessions in my life. It's true. Like, I have my clothes, I got my car, I got a house. Like, I mean, I'm buying the house, but like, I don't have like a lot of stuff in my house. Like, I got a little bit of furniture and I got, my household stuff, but like, I have very little material possessions. It's not something that really excites me. Like, I'm not. I bought the TV. I got that TV. That's something that I have, but like, I just don't have this desire to have things or toys or stuff like that. Like, I really want to enjoy experiences with my family. Like, I would like to take them to go do things. That's where I would rather spend my money on. Material possessions mean very little to me. I can care less. Forced demand, hence fiat. Are you a trader? I am not. Um, Minimism, geez, I can't even speak now. Minimism is freedom. All right. Let's see here. I want financial freedom, but I would still work at my job when I obtain it, and that extra cash, I can spend it how I want. I agree. Um, I enjoy I enjoy working and I enjoy doing the YouTube thing. Like, I enjoy both of that stuff. And I think I think one really supports the other, in my opinion. Like, having YouTube gives like the stress of my job, it takes like a lot of the stress out of it. Like, I don't have to be here, right? I'm choosing to be here. And when you choose to be there, it's different, right? Than when you have to be there. Like, if I'm forced to be here, that's a different attitude that you have. So when you choose it, like, I am choosing to do this, right? Well, then you take on a different attitude towards it. And then the same thing, having a job and thinking about YouTube, it was just like, again, like, I have a job, so like, YouTube, I'm not reliant upon it. So it's not a job for me. So YouTube is like still my fun hobby that I get to do, and the job is what supports my life, right? And then again, having the job or having YouTube says that, hey, your job isn't so stressful that you have to have it in order to make sure that your life continues on. So you get to have a different attitude at work now because of that. So to me, having both of those things are very like symbiotic. Why don't you trade? You're sharp with economics and with the economic fundamentals. Well, we talked about that a little bit earlier today, and I think probably the main reason that I don't trade is, for one, like, I don't have like this biased thought of like, I really want this to succeed, right? So, you buy into silver or silver, stocks or something like that, then you just like really want to see all the information that's going to confirm that silver is going to go up in price. Like, I don't have that feeling. Like, I just look at the economy for what it is, and if it goes up, down, or sideways, it doesn't make any difference to me. I mean, if it goes up, great. It goes down, I don't care. It doesn't, like, I just don't look at it that way. And so it gives me I think a clearer view of the economy, since I'm not looking for information that says what's going to be the one thing that I can put my money towards that's going to go up in price, because then you're going to start like, trying to narrow it down to that. To me, I'm just looking at the economy and just stating it for what it is or what I see, and not really, hoping or wondering or guessing on what's going to be the best possible place to put my money, and then hope that I'm right for it. Um, could I? Yeah, I probably could have done really well in the lumber industry. I mean, I called the lumber market really well. And there was quite a few traders who came to me and said, dude, I made a bunch of money off of your information. That's cool. Like, I could have done it right then, but that was one of the few things that I had that much confidence in. Like, I knew it for sure because I could just see it. I could see that industry almost clearer than just about anybody else, being in the retail position that I was in, and then having the communications all the way up to, like, I mean, from the loggers to the truck drivers to the mill operators, the mill management, distribution, vendors, retail, carpenters, like all these people. I was talking to all of them at the exact same time about the lumber industry, and I had a view of it that was much different from anybody else's, and that's the way I was able to nail the lumber market so well. The chances of us having another move like that in lumber where you can make a stupid amount of money from a move from 400 to 1700 per thousand, that ain't happening again. Like, not like that, not the way I seen it anyway. So I mean, I could try and do something in the lumber industry as far as that goes, but as far as like the big significant move where you could do something really really awesome, I think that time has already passed. All right. I help my farm buddies out. Yeah. Do it. Plenty of adults making less than $20 an hour. There are. And that's just that's what I found out there. It's like I work like I'm not saying that I work all the time, but I work a lot. Like, I am constantly answering emails or looking at comments, searching out for the next video. Like, that's what I'm doing. Like, if I'm on my, like, outside of work, I'm working on something towards YouTube, or I'm spending time with my family. But that's what I do constantly. If I didn't have the YouTube channel, I'd be working towards something else. I would find some other side income, whether it was like, networking to try and find a job to go to, whether it would be like, like physical labor or working for somebody constantly. I see people a lot of times, they'll end their 9 to 5 job, right? They'll get out, they'll do their 8 hours, and then that's it. Money making time is over. I'm like, what are you doing, man? You got another 8 hours that you could be out there pursuing even half the cash that you earned throughout the rest of the day. Like, I mean, you guys think about it. Like, I do YouTube, so you know that, right? But then I also call bingo. I'll do physical side work occasionally. Somebody will ask me, hey, man, can you help me out on a job or something like that? I will go and do that. I do my regular day job. Like, I will find and go for wherever I can to try and earn money. And it's not it's not like I need the money from calling bingo, right? But it's another form of income, and I love calling bingo, so why wouldn't I do it, right? All these are the things that I do on a constant basis to try and have some sort of, income stream coming in from every direction I can. And I see people, they don't pursue that. Like, they finish out their 8 hours and then they're done. They're like just done with it. And I'm like, man, you got another 8 hours. You could be doing so much more. It's gambling, but my multinational core tactics. You won't find a single person worth more than $1 million not involved in the markets. Let's see here. Trading seems like a gamble to me. Well, I guess it could be. Yeah, healthcare is another joke. I shattered my knee. Surgery was $180,000. I have to cover almost $8,000 out of pocket. It's ridiculous. My second kid was born with, it was a C-section, went off without a hitch, totally planned, no problems whatsoever. Insurance, after insurance, I ended up paying $6,500. That's how much I ended up owing after insurance, right? So you owe $8,000 after $180,000 surgery. That's not bad. I owed $6,500 after the $16,000 surgery. It's complicated. It's sport, I admit. I don't know what they're talking about. How was work today? Good, sir? Yeah, it was really good. We have a couple of new guys there that are training, trying to pick up pick up the game and try and run with it. Working lumberyard, it's not exactly easy. Like the hardware store, just ringing customers up, that's not so hard. It's answering the questions. Like if you are not somebody who has like worked on homes or a carpenter, or maybe have done like remodel kind of work or something in the past, if you're just like the average guy off the street coming in to a hardware store, you get asked a lot of questions, like especially like on home improvement. Customers really, they're looking for opinions and stuff on it. So if you're new to the game, I mean, that's kind of a difficult position. It's kind of intimidating almost, like you don't even know how to answer these questions. So I do have to say, these two new guys that we have working for us, I mean, both of them are pretty knowledgeable when it comes to at least the basic understandings of just doing home repair or construction and stuff like that. So that's been pretty cool, having two new guys working there. um, and then things have been actually fairly busy considering the time of year. Like usually things slow down dramatically right now, and it doesn't seem to be slowing down as much as I had anticipated it would slow down. Don't get me wrong, things have slowed down, especially like talking with some of the other vendors and stuff out there. They are definitely seeing a slowdown in the amount of sales that they are doing. But it does seem to be a little bit more as far as sales, the amount of foot traffic coming in is a little bit more than what I had originally anticipated happening at this time. So work was good. All right. Thanks, Roger. Stay away from e-boards or wear proper PPE. Okay, guys, I should have gone home like 20 minutes ago. So I'm just going to answer a couple of more here, and then I am going to bail out. Thank you, everybody, for hanging out with us this evening. We had 326 of you up in the chat, 315 likes, $63 in super chats. You guys are so supportive. I can't believe it. Just how much you don't know how much I appreciate this, being out here. So, all right. Thank you, bro. Yeah. Well, thanks you guys for being here. Okay, you can make calls on the lumber market. You can get funded fairly easily for six figures. Find one that's allowing trading lumber. There's other markets that correlate with lumber. Yeah, it's like, I don't know. I guess it's probably like maybe a confidence issue. Like just actually getting in the game and start playing it. I don't know. I probably should, because I study this stuff so much that I could probably be making better calls and doing something about it. All right, chicken or pork? Teriyaki chicken. That's I don't know. I'm just giving an answer. Have a good night. Well, you as well. You should, man. You have a good one. Well, thank you. I will later. All right, all nighter. Ultimate Bargains is Team Sunny, I bet. All right. Good night, everyone. Thanks, Simon. All righty, Chris. Thank you. All right. You guys have a wonderful night. Uneducated Economist. You guys let me know.